Welcome to TheoTrade. This is Don Kaufman. It's August 3rd, 2017. Going to show you a very nice trade setup this evening. But first, S&Ps today, what are they? Down about 5 points. I mean, overall, we've seen an incredibly docile range on this week. I mean, for the most part, what have we traded? Well, specifically in the S&Ps, right around 2470 the entire week. However, let me take you directly to the Qs and really a trade setup that I see kind of emerging in the Nasdaq here. And for that, first and foremost, the lines that you're seeing on the screen here, and I'll kind of zoom in the time frame to the last 6 months. These lines on the screen are all expected moves. These have all been hand drawn on a week-to-week basis. All it's doing is just exemplifying what the options, okay, we're looking for in terms of movement, again, on a week-to-week basis here. If you zoom into the most recent week, which I've just done, you'll see that for the most part, here's exactly where we started out the week. And roughly speaking, this is where we are. All right. Again, there's been absolutely no movement. We literally started the week out in the 143 handle, and here we are currently at 143.45. So in light of the fact that we haven't moved, you know, first of all, it made me look back at some of the recent weeks, okay, and the trading activity. Even if you look back at the previous week, we had wild Thursday where we actually touched the upper edge of the expected move, the lower edge of the expected move. The previous week, we actually crested through the expected move. The week before that, we smoked the expected move. The week before that, some fairly wild movement to the bottom of the expected move. The week before that, we blew through it. It just goes on and on and on and on. Okay. The point that I'm making with all this, and now I'll zoom out, this is the lowest, okay, in terms of actual movement that we've seen in quite some time. And that, in fact, is being reflected here under historical volatility. For those of you not necessarily kind of in tune with historical volatility, it's the annualized standard deviation of the past stock price movement. Okay, that was a fun definition. What does that really amount to? What does that mean? Actual price movement. Okay, and if you take a look at actual price movement, and I took the historic volatility and I set the time period down to a, 5-day, okay? So it's set to 5-day. Normally when you go in here, at least on thinkorswim, and you set it up, it's a 20-day. I knocked it down to 5-day because the trade idea that I'm looking at is going to be very, very short term. But we're at one of the lowest instances of actual movement that we've seen on the Qs. Okay, the reality is what that ultimately did is it's also drastically dropped the implied volatility in the Qs. And for those of you, if you don't necessarily look at implied volatility, you're like, oh, okay, this doesn't really do it for me. It means the option premium that you're looking at has contracted substantially. Okay, if you want to look at where it was last week, we'll come over here to think back. Okay, and think back, this is just end of day data. And here we are on the 3rd, but let's go back and see what it was, for example, last week. And you can see it was up close to about 14%. And it was projecting out about a week, about 15+%, even 16% just a few weeks out. Now go take a look at implied volatility, and I'll kind of close this up. Okay, what a difference a few days makes. A few days later, what we ultimately have is implied volatilities that have really crushed down. And I know that doesn't sound like a lot. When people look at this, they're like, ooh, but still my heart, right? Last week it was sitting at 14%, but now it's at 12.5%. Okay, there's the closing bell. But the reality is, okay, on a percentage basis, this is a fairly big differential. And it makes a huge difference in the option premium, the option pricing. Okay, the opportunity that I see, and I'm actually going to be discussing this pretty extensively in the TheoTrade chat room tomorrow, which is Friday, is to be on a buy side of the QQQ options. We're going to look to actually buy Q options because, again, it's some of the lowest implied volatility that we've seen recently. And even though it's some of the, again, I went to the historical volatility. Okay, it's low historical volatility, but it's actual price movement. But then I went back over here and I started looking, okay, in Think Back. And Think Back, yeah, it's just end of day And no matter where I went and think back, any given week, like look at the volatilities out here. It's like 24%. Okay. And I'm just jumping to random weeks over here. All right. Here's a week it was even lower. This is, a lull in volatility where it was down to like, 8.8%. But frankly, what I think is going to happen tomorrow, all risk aside right now, assuming tomorrow is a rather docile day, that the volatility is going to collapse even further and give us a great opportunity to be a buyer, a net buyer of options for next week. Okay. In another turn over here, again, we're looking at markets at the close. Look at this thing, massively unchanged by massively unchanged. If you take a look at some of the most recent trade of, really like the last 2-3 weeks of trade, we are stuck on the 2470 handle. I mean, it's just holding it. That's why I keep talking about, 2470. It's very exciting, let me tell you. Just being a little facetious with that one. Nevertheless, we have not moved. Not moving has actually helped us quite a degree. We closed our tetrapod spread today. These were the original orders, and I'll display, if you will, in this original order. We sold, okay, the iron fly in the spiders, and now I'll show you creating the opposite order. If we come over here and create an opposite order, we sold it for $1.58. We're actually able to buy this one back. It's currently trading for $1.08, but we actually bought it back right in the neighborhood of about 97 cents. So listen, this trade is not meant to be a home run, but again, we sold it for $1.58. We turned around and bought it back for 97 cents on the 3 contracts over there. So effectively it works. A reminder to everybody, the jobs number is coming out in the morning. Is there really any anticipation behind it? Is volatility picked up? No. And for that, you can look at the spiders, and the spiders will actually tell you specifically the volatility. We're riding at about 8% with what? Maybe a $1 expected move in the spiders. But really, I prefer to use the SPX. Now, the SPX and the spiders should be relatively similar, okay, in terms of pricing risk. And you'll see they're nearly identical. Here's the SPX. Instead of being 7.99, it's 8.12 on an $11 expected move. Okay, $11 expected move. It's almost the equivalent of $1 inside of the spiders out there. So not a lot of anticipation, again, coming into this jobs number. And even if you start to look further out, like I'm already looking at next Monday's expiration, I mean, you're coming in here and looking at what? 7% implied volatility, a $15 move, and that includes through Monday. So low volatility is abundant out there. And again, I'm looking not necessarily because the volatility is just rock bottom in the SPX, but the SPX, frankly, it hasn't moved. I mean, you have to take a look at this chart just to do it justice. I mean, we've had a range, okay, for weeks now that has actually spanned from 2470 to 2480, okay? And that's been it. You're talking about a 10-point range for weeks on end. That's why I'm not buying premium in the SPX. I'm buying the premium over in the Nasdaq. Why? Because we've all seen the Nasdaq is Mr. Toad's wild ride. This week, the ranges are decent on a day-to-day basis this week, but we just haven't gone anywhere. I want to thank everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.